we had a blowout fourth quarter. Earnings per share up 145% over prior year. EBITDA up 48% over prior year in the quarter. Wrapped up a fiscal year where earnings per share growth nearly 29%, EBITDA up about 15%. I think really what you saw today with the analyst consensus was really a really nice example of how unpredictable things became in the height of the coronavirus pandemic. And so there's a range of opinions there. And I don't think investors put a lot of stock in the consensus number. I think they're looking at what the actual numbers were and, more importantly, our path forward. But I'd be remiss if I didn't give a shout out to our tremendous team members, the 38,000 team members at Casey's, who really stepped up over the entire course of this pandemic and really delivered for us. And we threw a lot at them at a really rapid pace to try to adjust to situations on the ground. And I couldn't be more proud of how they handled themselves and delivered for their communities and for their guests.
Let's, and a shout out, I'm sure, well-deserved across your large system. Revenue was down, obviously, mostly in the second half of that first quarter as people drove less, consumed less fuel. I imagine that maybe they were carrying out more pizzas, but at the same time, they probably weren't staying in the store and picking up general merchandise and stuff like that. Have you started to see a comeback in your service area?
Well, Tyler, you're absolutely right. We did see a drop-off in traffic as a lot of the shelter-in-place orders took effect and commuting was down. But we have more recently seen an uptick. And as those shelter-in-place orders are lifted, we're seeing sequential week-over-week improvement in our traffic and in our sales. And I will say, with our pizza business, that whole pie business, the whole pizza business, has really performed well during this period as consumers are eating more at home and not going out as much.
Yeah, I would think that would be a very sweet spot in the equation that you have. Let's talk a little bit about the expense side. I mean, the spending side is one thing, but I'm wondering whether, because of heightened cleaning costs related to COVID and maybe extra cleaning supplies, that your expenses would go up, maybe because the stores aren't open as long or you don't need as many people, maybe labor costs have come down. Talk to me about that.
Well, you really hit it on the head. We had some increase in costs and decrease in costs, and what we needed to do pretty quickly was adjust the operating hours of our stores to meet the needs of our guests. And with a lot of people locked in, we just didn't need to be open 24 hours in a lot of cases, or as long as we were. So we truncated some of those hours, and there was a corresponding reduction in labor costs as a result of that. But we added some expense as well. The first thing we did pretty quickly was we wanted to secure our team members and our guests and make sure they were safe. So we implemented a lot of tactics around social distancing, adding plexiglass into our stores. We enhanced our cleaning, provided PPE to our team members. We also paid them extra because, like I mentioned before, we were throwing a lot at them, and they really stepped up. So we gave every hourly team member a $2 an hour raise, whether they're in our stores or distribution centers, and supervisors got incremental weekly bonuses. So the reduction in hours was a savings, but it was more than offset by some costs that we had to incur to keep all of our team members safe and motivated during the crisis.